19th of January. I had done a video, recorded it all, and then I went, oh, I'll tidy up my desktop and accidentally deleted the video that I made, which isn't necessarily a bad thing because it'll save me time doing this one now because I've got everything marked out. So just going back over the last week. So obviously the biggest observations really from this week have been when the 4-hour has been taken. That's when we're generally getting the better moves. Obviously it's a bit of a range bound market currently. How well that works in a sort of quote unquote trending market will, I guess, get there when we get there. So I've marked out, obviously we're on the hour chart here, but this is the 4-hour highs that have been taken. And again, when we look down on the 1-hour, most of these reactions do tend to happen in New York. So overall, our general thinking of wait till New York, I think will put us in the best position to catch. I mean, just with the examples I've got, you'll definitely make one solid trade a week, easy. 2-hour, easy. A lot of the trades would have gone a lot further, but that's not the goal. The goal is to just get the profit, get out, because I've wasted too much time trying to go for 8, 10, 15, and I could have taken 2 and be done and step away. So as we can see, all of this in New York. So the hourly, I've just put a little mark here for every candle to close that's happened on the 1-hour chart, which is price going above a high, closing below, which is then got the context of the 4-hour being taken as well. So obviously this is the 4-hour high, that was taken, closed below. This 4-hour high took that, closed below, so on and so forth. Let's just go into the 15. So again, there will be times where we will see price run a high, drop lower. Again, where is it to? There was an example, it might be on the 30-minute or possibly on the hour. I think it was further over here where the hour, it would look like it's not a candle to closure, so it's closed above. Here it is. This is the example I wanted to show. So this hourly candle, the context is if you're looking at the previous candle, it's closed outside that previous candle's range. The next candle then closes below. This being the 4-hour high though, we still have had that candle to closure of the 4-hour high. So it's just framing it in the right way. So I'll just put on the trades that I marked out for the week. So over here, so Monday, as I said, we take out the 4-hour high. We then have this candle to closure on the hourly, so coming in. Down on the 5-minute. When it decides to load. There we go. So the blue line is the close of the candle. Is that the 15-minute candle? It was just so I could navigate. Yeah. So again here. So if we look on the 15, for example, we don't have a candle 2 on the 15, but this is the hourly candle 2. So then at 4:15, we do close below. So you've got that candle 3 set up there where first candle, second candle closes above, but then the third candle closes below that range. So all we're looking for on the 5-minute is a very simple repeatable pattern, which we've sort of given it lots of different names in the past, but essentially we've closed below here the last set of up close candles. Price then drops down. Where is the most obvious place? Got this 5-minute order block sat here. Extra confluence on this setup, which has given a really nice trade, is the fact we've got all this built up liquidity on the 5-minute, runs that, taps, goes. This is a 100-point stop. Again, you would have got away with a 50-point stop, and 2R would have been hit a lot quicker. I think it really depends on sort of knowing what circumstances we can use 50 rather than 100. So in this case, we've got all this liquidity. There's a clear block here. That's just tapped it and gone. Obviously, this trade would have been at 10 to 6, so you would have set an order and you could have just left it. And I think sometimes that will happen. The trades tend to play out a little bit later sometimes on gold in New York, so it might not necessarily be between 2 and 4, but you can get the setup there, set an order, and as long as you're happy to accept the risk of it tagging and going, that's what we got. So that's the first one. That would have been Monday, so you would have had 2R. And there you go, you would have been done for the week. 2R, done. Tuesday. So again, price opens, we take out the last 4-hour high, which is a swing point as well. We have a candle 2 closure here below. So again, we'll just drop down to the 15. Again, we can see, where's Tuesday here? Yeah, so we've swept, drop down to the 5-minute. Did I drop down to the 1-minute on that one? I must drop down to the 1-minute on that one. No. What am I doing? I'm getting lost in my own techers here. Ah, right, okay. Ah, here we go. For some reason, this is not where I wanted it to be. So on the 5-minute, oh, yeah, bugger off. Again, similar sort of thing. Tuesday, let's just go back to the hour. Sorry, just getting lost with what I was going through. So again, hourly, sweep that 4-hour high, close below. So this candle, the blue line is where the hourly closed, okay? So when we go back to Tuesday, that's Thursday. Yeah, for some reason I was down on the 1-minute on that one. Didn't even realize it yet. Remove it. So this is where we get that closure of the candle. So what we want to wait for is for price to then show close below these set of candles here, which we get. Again, what is left here? Well, we've got a nice clear block. So again, this is at 3:15, so you can be looking at this and going, ah, right, that's where I'd want to get in. So you can just set your order. And again, we could probably get away with a 50-point stop because we've got some liquidity before. It's not just come back up. But just to demonstrate, if we're using this just with 100 points, would have been fine, nice and easy. And again, 50 points probably wouldn't be a good idea because it's still there. So 100 in that case is fine. Would have hit 2R very quickly. So that's 2 days, 2 trades, 4R. Not bad going. And not overly complicated, just very systematic in 4-hour high, candle 2 closure. Is there a trade? Yes. Obviously in this example, it did go on to then take previous days Asia range low. So again, you're not really missing out on too much. You would have got, what, 4R out of that? 4.5? Doesn't matter. Grab the 2. See you later. Right. On Wednesday, there were 2 possibilities. So the first one, we can see at 12 o'clock, got a bit of a range in market. We come up, take an Asian high, and that's a 4-hour high. Candle closed below. This blue line is obviously where this candle closed. It's Thursday. Here we go. And what happens? Well, price pushes down. We close below. Last set of up close candles. Where's the obvious block? This last up close candle. Price taps in. You would have hit 2R. So again on this one, you probably would have got away with 50, but again, just for safety's sake, I think 100 is just a nice, easy, repeatable number. It just means that you can use either a 1 lot, 2 lot, depending on the account size. But again, that's 3 trades now using the same process, 6R. Now, if you waited till later in the evening, if you obviously missed that because you weren't looking at the chart at that time of day, what happens? Well, again, if we're waiting for a 4-hour high to come in, price comes back up, so we react off this gap down here. Price pushes up, we take out the 4-hour high, and we have a candle to closure of the 4-hour high. So again, if you're going by the T Trades videos and what he's looking at, if you're looking at this last candle, technically you've not got candle to closure. Next one will give you a candle to closure. But the context of this hour candle is it is closed below the 4-hour high. And then when we drop down to the 5-minute, that's Friday. And we're still on Wednesday, sorry. Yeah, so this is the high that goes. It's not very clear. Haven't got any break below. But when we watch price play out, when price eventually breaks below these last set of up close candles, you've got this last little candle here that price taps into. And again, we can see it goes through all these wicks. But if you tapped in there, 100-point stop, you would have hit 2R. I mean, on the 15, yeah, so again, there's another entry potentially here. So if you're just looking at the 15, if you didn't like the look of the 5-minute, it wasn't too clear. When price eventually on this candle closes below, and again, it's later in the evening, but once price closes below here, we're then left with this nice clear 15-minute block. So even if we use that one, you would have been fine. Next candle, tags in. I mean, this one you'd have to be on the ball, watching price, getting in there pretty quickly, but again, you could still get 2R. So that's Wednesday. Right, Thursday. Obviously, price drops down, create a nice swing point. So at 4 o'clock, this was where we had this large hourly wick. So price comes up, takes out the 4-hour high, closes below, closes very strongly, and then price comes back up into that 50% of that hourly wick. So 2 options I've got marked out here. If you weren't happy with that, you could then wait again, wait for another candle to closure, which again, we was watch price. Eventually, so you can see here, we've got the context that we know 4-hour high has been taken, but there's not clean price action. So just wait and wait. So again, it's a later afternoon New York session. So if you're in New York, this would be your afternoon. Next candle closes above, so no candle 2. Next candle takes out the high, drops below. Obviously, we did have that 50% of the wick. Price then closes below here. And again, this would be more a set and forget type scenario. Once prices close below, you've got this set of candles that even if you use that, 100 points would still cover the high, which is if we're thinking price is going to go lower, it shouldn't need to come back up here. Using these block of candles here, you would have been tagged and then it would have played out. On the 15, you probably could have got away with just using this last 15-minute candle if you were looking for a bit of a clear. Again, there's a bit of a gap beforehand, so again, you still would have hit 2R. You know, price would have pushed in, dropped, another trade. And then Friday. So yesterday, again, we've got a lot of sideways action. Not only does it take out the 4-hour high, it takes out Asia high. And if we're looking at the 15, we have a candle 2 closure here, and this is where on the 5-minute, if you know you were watching this candle closed below, you could use that block there. You would have been tagged in, 100-point stop, and you would have been fine. 2R very quickly. And then obviously this trade has not stopped me out just yet. Like I said, price did push up to this last candle here. And what do we have? These wicks just above, so you've got a bit of liquidity there. My entry was here. 100 points is there. So it got very close. It may stop me out, it may not. But that's what we got there. And just to go over to Darwin, just to give an update on that. A couple of weeks ago, I did go, like I said, I think on a previous video, a bit of a Wally bender, but I've managed to sort of slowly but consistently claw that back using this method. So it's been very good, very consistent, allowing me to dig myself out of this sort of drawdown. So currently, so the return since inception is 2.77, max drawdown 7.45. I think the current month I'm up 4.63%. So again, I'm really happy with the stats. So October, it was saying I was up 0.5, I don't know why, but November down just over 0.5%, December down 1.7, currently for January up 4.63. Darwin risk is slowly improving. Darwin rating is creeping back up, so there's a possibility if I just keep doing the same thing and being consistent, still got a couple of weeks, there's a good chance I can get this up to 75, which if I can get that up to a 75, what do I need to get as a 75 rating? That's 74. I'll bet you that'll have to be like 8%. Yeah, so if you get an 8% return, or if I get that to an 8% return, that would mean I would then be allocated a 30,000 or 30,000 euro allocation, and then that goes on to a quarterly basis where I'd get 15% of any profits made on that. And then obviously it's just a rolling month. So then if my February is positive, and I think it just continues to build, so there's a better chance that, argument's sake, if I end January, let's say on 8%, if I maintain that 8% and like say I get that to 10 or 12, obviously I'd have to see what that would be. There's a good chance then in, what would that be then, the end of February allocation, I might then be able to get another 30,000, so on and so forth. I think it's 3 max allocations you can get. So yeah, what's what we got over here? And then to participate in gold, yeah, you need at least a 20% return overall. And then obviously with that there. So all starting to go in the right direction, and I'm happy.